This is the Energy Makers Show, featuring the innovators, financiers, and policymakers focused on the global energy demand. Brought to you by NRG, moving clean energy forward. And here's your host, Russ Capper.
Hi, I'm Russ Capper, and welcome to episode number 113 of the Energy Makers Show. Today, following up on our Doug East visit in Pittsburgh. First up, Gary Evans, Chairman and CEO of Magnum Hunter Resources, discussing his company's focus on unconventionals in the Bakken, Marcellus, and now the Utica. Then up next, Peggy Williams, Editorial Director of HART Energy. All that coming up right after this.
At BKD, we understand the constantly shifting nature of the energy industry. As a national CPA and advisory firm, we serve energy clients from the beginning to the end of the cycle. Our experienced energy advisors serve approximately 300 energy companies in exploration, midstream, downstream, oilfield services, and power production. Plus, we're the largest North American member of the Praxity Global Alliance, which means we can help you wherever you operate. Contact a BKD advisor or visit us online to learn more.
This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now, back to the Energy Makers Show with your host, Russ Capper.
Welcome back to the Energy Makers Show, coming to you now from Pittsburgh, Pennsylvania at the Doug East Conference, brought to us by HART Energy. And my guest now is Gary Evans, Chairman and CEO of Magnum Hunter Resources. Gary, welcome to the Energy Makers Show.
Thanks for having me here today.
You bet. Well, give us an overview of Magnum Hunter Resources.
Magnum Hunter is a company based in Houston that's involved in the unconventional resource plays. That's all we really do. We started out with 3 plays, being the Eagle Ford, the Bakken up in the Williston Basin, Marcellus. We sold our Eagle Ford piece earlier this year, and now we've moved into the Utica. So we still are a 3-legged stool. 75% of our company, though, is now Appalachia. We also own a midstream asset called Utica Hunter, which is a gathering company that gathers our gas. Okay, well, Utica is pretty popular at this event, but I'm under the understanding that it's still not proven. How do you really feel about it? We're definitely in the early stages of the Utica development.
Right.
A lot of the companies thought the development began and was going to be cored up in the northern part of Ohio. That's since moved to the central part of Ohio and now moving further south to where our leases are in the southeastern part of Ohio. So it's still early, but there's been some tremendous wells drilled by a number of companies in and around our area. And because we have a gas gathering system, we're gathering a lot of that gas. And so we're drilling our first 2 Utica wells as we speak.
What was it that motivated you to leave Eagle Ford?
We didn't have what we call shale scale. Shale scale is a term we use that we have to have enough leases in an area to really build something substantial. We only own 19,000 acres in the Eagle Ford. We had great success. It drilled 50 wells, but it wasn't going to be big enough. So we monetized it. We doubled our money. We had about $180 million invested, sold it for $401, and then moved that money into these other plays. So in the Eagle Ford, as I said, we didn't have the scale, but up in the Marcellus and the Utica and the Bakken, 100, 150, 200,000 acre plays there. Okay,
but obviously when you chose Utica now, you balanced against other options, more in the Bakken, more here in the Marcellus. Tell us a little more about what is it there that you think is going to pay off?
Well, it's difficult to move from an oil play, which was the Eagle Ford for us, into a pure gas play with 350 gas.
Right.
But what makes the Utica so unique and interesting to us is it has all the ingredients of a world-class play. It's got the resistivity, porosity, permeability. It's got the total organic content of the reservoir. It's got pressure. It's got depth. And it's got barriers, shale barriers above and below it. The Utica is really not what anybody's drilling. It's the Point Pleasant. The Utica is a shale that blocks it. So it's truly a carbonate reservoir, and what makes the return so high is very low decline rates. It's high pressure, almost a geopressured regime, and you're talking wells putting on 20, 30, 40 million a day gas wells in a 350 environment with no decline. Your rates of return over 100%.
Okay. Now, obviously, it might be set up to be very well and profitable for you, but as a play in the total picture, do you think it's just going to outperform the others?
Well, I think time will tell, but all the indications are that it'll be very difficult for plays like the Haynesville, the Fayetteville, the Barnett, Gulf Coast, Rocky Mountains to compete with the Utica and the Marcellus for that matter, but it's changing the complete dynamics of the business. All of a sudden, instead of gas going to the Northeast, we got to move gas to Gulf Coast, to either to LNG or the petrochemical industry or to Chicago. So it's really causing a complete change of dynamics within our industry.
Okay, but isn't the water challenge a little bit bigger in the Marcellus, and I would assume the Utica as well?
Absolutely. Having access to water, fresh water, to frack the wells is a challenge, and handling the water once you do frack the well is a challenge. The state of Pennsylvania only has 7 commercial disposal wells. I have a company that I'm involved in called Green Hunter Resources that is the largest water company in Appalachia, and we have 9 wells in Ohio and West Virginia. Probably will double that to 15 to 18 wells next year, because the business is coming all to that area. The disposal wells typically only handle 1,500 to 2,000 barrels a day, and the volume of water is overwhelming.
Right. Okay. Well, you sound prepared for it, though, too. Now, I understand a week ago you issued your third quarter operational and financial performance numbers, and your stock took a nice bump. So what was it the investment community, what do you think it was that they liked most about what's happening?
Well, I think just further validation of our business plan. We told the street that we would sell a number of non-core assets to concentrate on these 3 plays. We've sold to date already close to $500 million of assets. Another 200 will be closing here over the next 45 to 60 days. And that improves our liquidity position and gives us additional capital to use in these plays. That coupled with we re-verified our exit guidance of 23,000 to 25,000 barrels a day here in the next 45 days with the exit for 2013. That's a doubling of our production. And then we gave guidance for 2014 at 35,000 barrels a day as an exit rate. So I think a coupling with all those and then additional wells being drilled in our area, in our backyard, that have been reported by our competitors, continues to validate our acreage position.
Really cool, real interesting. So what I assume maybe this is a standard Gary Evans project where you kind of start, build, and sell?
Our goal is to eventually sell the company. I think we've got a couple more years under our belt to really build the scale that we want to be attractive. But we're having a great time doing it, and 75% of our company now is in Appalachia, in a gas environment that's definitely subpar, especially compared to what natural gas prices are being paid by countries like China and Japan at $13, $12 an MCF. So I think the long term for gas is going to be very bullish. We're going to short term, we're going to have some headaches, but we think that we can make money in this environment.
Well, and I think the fact that the feds are kind of opening up for LNG exports perhaps makes the future a bit brighter as well.
Need to do it bigger and faster, though, because we're finding these wells quicker than anybody anticipates. And so I think the oil and gas industry is really getting our country positioned for another industrial revolution. You're seeing all kinds of petrochemical companies as well as fertilizer companies, ethylene companies, crackers being built because we got cheap ethane, we got cheap methane, all the ingredients these guys need. And so you're seeing the coal industry pretty much decimated by the Obama administration, which has obviously helped natural gas. And so you're seeing lots of new generation being constructed throughout the Northeast and actually throughout the country that will create more gas demand.
Well, and obviously you've been in the space for quite some time, but this is still just extraordinary times, right? I mean, everything that's changing, the change for our future, for the young people in this country, the fact that the supply thing has been, it's epic.
It's unfortunate that our government just doesn't completely embrace this, because this industry by itself can bail the United States out of the mess it's in. So if you look at the jobs being created, you look at the fact that this country can become energy independent in the next 15 years and not have to rely on OPEC, not be subject to Middle Eastern politics, it's revolutionary. So there's many countries around the world that are enviable of what the United States has been able to do and this industry has been able to do to make us much more independent.
And not to mention that with all of the gas replacing coal, CO2 emissions is like at a 10-year low.
10-year low and can continue to decline.
Yeah, absolutely. Well, Gary, I really appreciate you sharing your story with us.
Thank you for having me today.
You bet. That wraps up my discussion with Gary Evans, Chairman and CEO of Magnum Hunter Resources. Hi, I'm Russ Capper, and welcome to another edition of the Drilling Bits, brought to you by Sickage. I'm joined by Greg Price, partner at Sickage, and also author of the Drilling Bits. Greg, good to be with you once again.
Thanks, Russ. It's good to be here. Things are moving in the oil patch as always.
All right, what are we going to talk about today?
Russ, what we're going to talk about today is workflow.
Okay.
Workflow deals with establishing processes and procedures that the software drives for your employees.
Okay, I think that can be pretty important.
It can be. We see its use in really a couple of key areas. One has to do with training and implementation. So there's been a lot of job increases and lots of employment opportunities for folks, and so you have a lot of new people coming into the industry. They don't bring the same tribal knowledge as those who may have worked in the business 20, 30 years, and so they need to be brought up to speed fairly quickly. So workflow allows them to utilize the power of the computer, and at the same time, company executives know that they're going to follow the prescribed procedures and policies for the implementation of the company's business.
Sounds smart.
So that helps them in a number of ways, speed and timing. And secondly, there's the protection against possible litigation. If there was an incident or an accident that occurred, you have workflow that shows how things were done, who did them, and the timing of it. So there's no question as to whether or not a person performed the procedure that was required under the prescribed rules as set by the company. And also you can factor in regulatory impact as well. So the regulatory areas are considered as the daily operations are worked on as well.
Sounds like smart protection to me.
Well, we have a lot of interest from people in the use of workflow. As a matter of fact, it's generating so much interest that sometimes people are using it to build a health and safety solution in addition to utilizing an ERP solution.
Very interesting.
It can be.
All right, and that wraps up this edition of the Drilling Bits, brought to you by Sickage. Thanks for tuning in.
This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now back to the Energy Makers Show with your host, Russ Capper.
Welcome back to the Energy Makers Show, continuing on from Doug East in Pittsburgh, Pennsylvania. And I'm very pleased to have with me Peggy Williams, the Editorial Director with HART Energy. Peggy, welcome to the Energy Makers Show.
Thank you very much. I'm delighted to be here.
You bet. Well, it's such an impressive show. You kicked it off, and it was your opening comments that sort of impressed me. I discovered, in addition to having this extremely important role with HART Energy, you have history right here in Pennsylvania.
I do. I'm actually originally from Western New York, just above the Pennsylvania border, from Olean. I went to graduate school at Pitt, University of Pittsburgh, and I've worked in the oil industry here for my first professional job at Peoples Natural Gas.
Wow, and you're a geologist, right?
That's correct.
Okay, and so that got you started, and you've been in the energy industry the rest of your career?
That's correct.
Okay.
Yes.
What was it that attracted you to HART Energy?
Actually, I reside in Denver. HART was based in Denver at that time.
Okay.
And I went to work at HART covering oil and gas activity worldwide for them.
But your history in Pennsylvania, I mean, Pennsylvania has a long history.
It does.
Of oil and gas. But in your wildest imagination, did you ever perceive that at some point we were going to be extracting oil from the shale here at Marcellus?
No, when I started in Appalachia, this was kind of a backwater for the oil industry. The glory days of the big wells and big discoveries and big budgets were long gone.
Right.
People that worked here kind of wistfully looked at activity in the west where the overthrust belt was very hot, activity down in the Gulf of Mexico,
Right.
where major new discoveries were being made, plays like the Deep Tuscaloosa in South Louisiana. That's where the money was being spent. That's where the action was.
Okay.
Now today it's been a complete turnaround.
Right.
Now this is where the big budgets are, where one of the largest gas fields in the world is the Marcellus shale.
Right.
And we see enormous additional potential in the Utica.
Right. Well, the Utica's talked about a lot here today. I kept hearing before I got here that, it's still way too early and probably is not going to have the potential that it's talked about. But boy, after a couple of interviews and discussions, there are some people that are extremely excited about the Utica.
Yes, the Utica is shaping up very nicely. We've had several operators speak on that, and their well results in what we call the wet gas window are very strong.
But the whole transformation caused by the understanding of hydraulic fracturing and horizontal drilling is just unbelievable.
It is.
And when did it first start becoming apparent to you that this is going to be of epic proportions?
Well, we have, at HART Energy, we've of course been reporting on and involved in the oil industry for more than 30 years.
Right.
So we were actually on the very, involved in the very first glimmerings of this happening, interviewing, for instance, Devon Energy when they first bought Mitchell Energy. Right. The Barnett Shale, where that big transaction occurred, was kind of the catalyst for all the rest of this activity. It started somewhat slowly, but then once the technology to do multi-stage completions in horizontal wells was perfected, it spread across the industry. And today we still see, they're continuing to hone and improve that technology, so the wells are getting better and better.
Okay. I kind of sense that you probably like what you do as editorial director of HART, because you're kind of right in the center and see it all.
Yes.
Kind of describe your actual day-to-day activity there.
Well, I spend a lot of time on planning conference themes and agendas, on overseeing the editorial direction or content of our magazines, our websites, our newsletters. So we have a whole suite of different ways we deliver information.
Okay.
So that's what we try to do, is give the customer the information they want in the way they want to consume it.
Okay. From the outside looking in, it just really appears that particularly the conference business for HART Energy is just flourishing right now.
The conferences have done well, but we are a lot more than just, we're not essentially a conference company.
Right.
We're have digital media, we have print media, we have the conferences, we have research and consulting. So we really do try to deliver information in all different ways. Personally, I think the conferences have been very popular because much of this information about these shale reservoirs was not taught in traditional schools.
Right.
And so people had to come to events like this to talk to each other, to exchange information and to learn, because the industry was kind of doing a very experimental evolution.
Well, it's kind of interesting, particularly on the DUG conferences, and even the name, the acronym. I knew the U stood for unconventionals, figured out the D stood for developing,
Right.
but I said, what's the G? And eventually I went through the history, and it was initially developing unconventional gas.
Yes.
But as the oil from shale and the other liquids came along, you say, well, it's not really just about gas anymore.
That's correct. Initially, when this technology was developed,
Right.
many people in the industry believed that you could not produce liquids
Right.
through these very tight rocks, such as shales.
Right.
But technology has overcome that objection, and clearly now you can look at the oil production for the United States
Right.
and see that the shales can indeed produce significant volumes of oil.
Well, Peggy, I really appreciate
Thank
you
you.
coming in and sharing your story with us.
You're welcome.
You bet. And that wraps up my discussion with Peggy Williams, Editorial Director of HART Energy. And that wraps up this episode of The Energy Maker Show, heard on the radio and seen right here at TheEnergyMakers.com.